December. This is your business morning. Welcome everyone to the program. I'm boasting them of you. Let's get the show started. Exotic Capital is an investment bank based in London, and of course released a report, say called Outlook, our 2019 Outlook, and part of it spoke a little bit about Nigeria, and that was on the 27th of November, just about a few days ago. And the investment bank says it's retaining its buy recommendation on Nigeria's bond maturing in 2047, but Nigeria's that bond was no longer among the top 5 picks at Exotic Capital. And the reason was simple. The report says recent declines in oil prices and period of uncertainty was responsible as we head towards February 2019 presidential elections, which according to the report, which at the time of writing that report appears to be on 6-month treasuries, Nigerian treasuries yielding 13.7% because of the attractive yield premium and currency, that's the Naira, that will almost certainly not devalue prior to the election and should be relatively insulated from large devaluations thereafter based on what you call the real effective exchange rate valuation. That's what the RERR stands for, of close to fair value since the introduction of the investors and exporters window at the rate of 364 to 1 American dollar. The report went on to say that if the investment bank, Exotic Capital, believe that Nigeria continues to offer strong bond repayment capacity because of the country's FX reserves, which is currently at 45 billion US dollar. The report says Nigeria is unlikely to suffer another recession as long as oil prices remain above $45 per barrel, and recent declines in oil prices are a concern as they will lead to additional strain on already weak fiscal accounts. Nigeria has the world's worst revenue to GDP ratio of just about 5% and abysmal debt service ratio that consumes nearly 60% of the country's federal revenue, according to the Exotic Capital November 2018 report. Meantime, according to the report, solvency indicators such as debt to GDP ratio of nearly about 22% and the FX reserves coverage of about 17 months, however, help Nigeria to alleviate those concerns expressed by the investment bank, Exotic Capital. Meantime, this is a bit of a summary of the business expectations November report published just yesterday by the central bank, saying respondents expressed optimism on this macroeconomy, business activity, financial conditions, which is working capital. But what are the negatives according to the central bank report? Insufficient power supply, high interest rate environment, unfavorable economic climate, financial problems, unclear economic laws, access to credit, insufficient demand by consumers, and unfavorable political climate. How does the numbers stack up? So let's just look at the next page and you find the business expectations reading. Overall response rate was 98.3%, and that looks good. Business outlook and confidence index came in at 25.9 against 23.3 in the month of October. That's a bit in a positive territory. Services sector was the most optimistic on business confidence at 14.9. Industrial, a little bit less optimistic, 7.8 index point. Wholesale and retail sector was 2.6, and construction confidence in business expectations was just 0.5 reading. Under the heading of the financial conditions and access to credit, you have financial conditions confidence reading was 22.1 and access to credit 21.7. In terms of employment, it was 70.1 points on the index reading according to the survey. Business expansion, however, was reading 29.2 points. In the area of business constraints, of course, insufficient power was at the top of the survey according to the central bank, coming in at 64.7. And the expectations on exchange rate confidence, the confidence indices of Naira appreciation in the next months was at 19.4, while outlook or expectations on inflation at 7.0, while companies expect borrowing rates to rise in the current and the next month. Okay, we'll find time to go over this for you once again. But again, today is a big day for the Nigerian Stock Exchange, holding the exchange-traded funds conference for 2018, bringing a strong faculty together from around the world and at home here to discuss the exchange, the derivatives market, in particular the ETF. Ahead of that, late yesterday afternoon, Temple Ashaju, our business and markets correspondent, caught up with one of the faculty members, Deborah Fro, who is the managing partner and co-founder of ETFGI.com. Let's take a listen to what she has to tell us. Okay, let's get on to Temple Ashaju to talk to us about this particular interview. We'll get that in about a minute. Temple, good morning. Is live to us from the Nigerian Stock Exchange. Temple, good morning. It's good to have you on the program with us. Okay, Temple, if you can hear me, the question is: yesterday the stock market got a bit of a breather, 0.68% on the all-share index. That's because the banks brought in about 2%, north of 2% to the table, and insurance, their cousins came in at also a positive reading after a negative Monday. So put this together for us, then we'll talk about the ETF a bit later. Okay, sorry, I guess we have a bit of connection, technical issues there. Let's bring you the numbers now. Look at it in bold. Really, if we got the 31,000 index reading back yesterday, 31,007.25, 0.68%, nearly 0.75% on the index reading. The equity cap also came back a little bit gentle to 11.320 trillion naira. But it was a very thin trading day. If you look at the volume, less than 200 million ordinary shares. Take that away. Let's go to the next page, and you can see 198.53 million, but investors were a little bit active. We had less than 3,000 in terms of total transactions. That's 2,802 deals. Then the naira value tells you the value of what was traded, 2.11 billion naira. So the big question is if Santa Claus will come to Custom Street this year, as we had in 2017, a very lackluster, negative period for most of the year. Then at December, the market came back with what you call, quote-unquote, the January effect. Look at the 5 sectors. And the banking sector, that's where we say thank you for that, 2.62%. Yesterday was a very bloody trading day on Wall Street. Major indices in the United States were finished off in the negative territory because of investors' negative sentiments coming back to play. And oil prices still gaining, but losing some of the earlier rally that we saw. But in Nigeria, as a frontier market, sidestepped that yesterday because investors came back strongly into the financial services sector, 2.62% for the banks, insurance 0.67 on the subsector index reading. Consumers and industrial goods showed you the negative sentiments across in that corridor, 0.13%, 0.94%. Then you look at the oil and gas, and that gives you 0.13% also in the rest. So banks and insurance took the market to a positive territory. Big names were on the counter the banking sector, GT Bank, UBA and Zenith. 3 of those Tier 1 listed lenders gave the market a very strong fillip there. Okay, so let's move on. If you look at the rest of the market, quite a bit of an interesting day. The oil and gas sector, I'll take that in very quickly. You look at the oil and gas sector, it was largely lackluster, all grey on Tuesday. That's very cloudy there. Roll it away, folks. Let's just talk to Temple Ashaju. There's nothing much in there, anyone, folks.